Hi everyone, I'm Charlene Pemberton, and I'm excited to guide you on your financial journey. Whether you're looking to save, invest, or plan for the future, you're in the right place. Get ready for expert advice on budgeting, investment strategies, debt management, and real-life success stories that will inspire you to take control of your finances. Join me as we break down complex financial topics into easy to understand lessons, empowering you to navigate your financial future with confidence. Welcome to Navigating Your Finances, your trusted resource for mastering your money and achieving financial freedom. Hello, everyone, and welcome to Navigating Your Finances. I'm your host, Charlene Pemberton. I'm a financial educator, and I just have a passion for helping people do better with their finances. Today, we have an exciting topic, a topic that rarely people want to talk about, but it's necessary that we talk about. We're going to be talking about taxes and tax preparation today. I'm not an expert on taxes, but I know someone who is. So I want to welcome Joy Pemberton. She is my niece, but she's also the founder and most importantly of Pemberton Tax. So welcome, Joy, to Navigate Your Finances. And we're going to jump right into this interview. I want to start out with just asking you how you got started in the business of taxes and how did you become a tax professional?
Sure. So thank you, Charlene, for that wonderful introduction. So I actually got started about 15 years ago. I was doing a number of contracting side gigs, if you will. And I ended up with about 12 or 13 income forms. And so I went to a local tax firm. They quoted me at like $700. And coming right out of college, I said, no way am I paying that. I'm going to figure out how to do this myself. So I did it myself. It took me a few hours. And then I went to that firm because they also had like a complimentary tax return review. And I said, hey, I'm not sure if I did this right, but would you mind taking a look and just letting me know? And the tax preparer looked it over and offered me a position on the spot because she mentioned, this is a very complex return and the accuracy of this is great. They actually had a tax preparation course that I could take. And so I did take her up on that offer. And then over the years, I have taught that class in tax preparation, tax education, and just really enjoy it. And I think it's very important for folks to really understand how much control they have over their tax outcome. And that's, one of the main reasons why I do this.
Awesome. Thank you so much. So then as we move forward, I just want to ask, in Pemberton Taxes, what are some of the services that you offer to your clients?
So I stick to five main service offerings. So the first, as an IRS enrolled agent, I am federally licensed to represent taxpayers before the IRS. So first and foremost, IRS representation. The second thing that I think is really important is for folks to understand how their employer benefits impact their tax returns. And so I do offer an employer benefits review. There are a number of benefits from your employer called fringe benefits that reduce your income that you report on your returns. So, example, your health savings account, retirement plans, commuter benefits, educational assistance, and things of that nature. And then in looking at tax brackets and increasing the amount of taxes that you might owe, bonuses, cash awards, if you moved for your job, so moving expense reimbursement, that also impacts your return. So I find that a lot of people don't really understand how those benefits may impact them later on. So employer benefit review is a good one. Of course, tax preparation, and I focus on individuals, families, small businesses, and then estate and gift taxes, tax consultation, and then what I really enjoy is the tax education. So those are the service offerings there.
Okay, so everyone, if you're looking for a tax professional that has those services, we'll share her contact information in the end so that you'll be able to reach out to her. And then as we move forward, when we're looking for a tax professional, what are the things that we should look for? What are the questions we should ask so that we can ensure that the tax professional that we're getting is someone that could competently help us navigate our taxes?
Well, I think the three characteristics that you, or qualifications that you should look at is credentials, transparency, and integrity. So I say credentials, one, because being an enrolled agent, I'm a bit biased in that regard. I think it's very important, and you're held to a higher standard by the IRS and uh, different state Department of Revenue offices. You're required to adhere to a code of ethics. In keeping the certification up to date, you have to um, enroll in different updates in regards to tax law and knowledge and really be aware of how those things can impact people overall. So I think the credentials is really important. And transparency is huge because I do have a lot of clients now who had previous preparers that didn't even go over the returns with them, right? So if you ask a question, are they shifty? Are they direct? It's no different than, going to a mechanic about your car, right? So you would still have those questions, have those red flags in the back of your mind. And so I would essentially say, whoever you go to, just make sure that they review the tax returns with you. And that brings me to the integrity piece, ensuring that the information in the return is correct and complete based on the information in the forms that you gave them. Again, I have a number of clients that have come to me because they have received letters from the IRS and say, there's a daycare business on your return. Can you provide more information? And they're like, I don't have a daycare business. I've never been in daycare. And so that's part of that, not going over the return, not really making and checking, behind the person that's preparing your return and making sure that the information is correct. So I think those three qualifications are huge.
Okay. And you want to stay off that radar of getting audited, right? So it's
Yes.
best that you hire someone that will keep you from being audited. And that's
Yes, very
really
important.
important. Yeah. So, so yes. And you mentioned your your IRS credential. How do you go
Mm.
about getting that for people that may be wanting to get that?
Okay, yeah. So it's directly through the IRS. There's actually three courses that you have to take as a part of the larger uh, certification. So there's one part on individuals and small businesses, and it really is familiarizing yourself with tax law. And so there's tons of knowledge within the IRS database, which is accessible to the public. And then the second one is on just businesses in general. And then the third one is on corporations and nonprofits. So it's a three-part exam. It's called the Enrolled Agent Exam. And a number of testing centers throughout the US have the exams available. So there's great study material on the IRS website. They have links directly to the different books that you would need to utilize for each course. There's online courses to help you prepare for them. So I think I took all three within a 4 months time frame. And
Okay.
you could take them in whichever order you want because there are some people who are very familiar with corporation taxes, but don't do too much in the small business C Corp, S Corp tax. So you can take whichever one you want first, second, third. And then once you pass all three with an 80% or higher, then you have the IRS enrolled agent.
Okay. Thank you. And I'm sure that'll be helpful. Again, she said that the irs.gov website has the information for you to go through that training process. Okay, we're
Mhm.
gonna shift gears to someone that may want to do their taxes on their own, right? They want to use a tax professional. What is some advice you would give them about just ensuring their taxes are correct?
First and foremost, please take your time. That is huge. Doing taxes is not and should not be a rushed process. I know, like Charlene said, it's not something that we like to deal with on an annual basis. We just want to get it done and get it over with. But when you take that extra time to just kind of sit down, take a couple hours to review each question carefully, this is how you ensure that the credits and deductions that you qualify for are not missed and
Mhm.
that the information that you input into whatever system or software you use is not misentered. So, um, take your time, review each question carefully, and if this is your first time doing it on your own, or if something has changed in what I like to call your tax story, where really is any life events that have impacted you throughout the year, everyone's tax story is different. Find a reputable firm or tax preparer who offers a review service. Like I was talking about what I did, 15 years ago. I was not sure if this was done correctly. And before I filed it, and before the IRS came after me, can someone please look at this, right? So I think you can definitely look at CPA firms or any tax firms near you, and maybe they have like a tax return review service that you could take advantage. And once you know if you've done it correctly, then you can have a little more confidence in going forward and doing it again.
Okay, great. And then I guess a follow-on question to that, what are two to three of the deductions or benefits that we tend to overlook when we're filing our taxes?
Yeah, that's that's huge because again, that goes with the take your time and look at the questions. And I find that sometimes in the software it kind of assumes that you know what you're doing, so it may
Mhm.
not ask all of the questions directly. And so you miss some of those things just by not clicking those little check marks or the little question mark buttons. So the overlooked tax deductions that I find on the federal side, one is a lifetime learning credit. And I know a lot of folks have heard about the American Opportunity Tax Credit. And so that covers the first 4 years of undergraduate degree, right?
Okay.
But then in addition to that, there's a lifetime learning credit that does not expire. You can be 80 years old and taking a certification class. And if your income is under 75,000, you can qualify for this lifetime learning credit up to $2,000.
Oh,
So a lot of folks think that after they get their bachelor's degree, that's it on the learning credits. But there is one other one that often gets overlooked. Another one, which is not really a deduction, but a status, is
mhm.
injured spouse. So when I worked for a CPA firm a couple of years ago, I did find that some couples delayed doing their returns because the spouse may have owed back payments for child for what am I thinking about? Student loans
Okay.
and things like that, and so they didn't want to do the return because like, oh, my refund's going to be gone anyway. I'm not going to get to see any of it, but you can claim injured spouse status, and it's a form that's attached to your tax return. And the portion of the refund that, let's say, the husband owes back taxes, the
Okay.
portion of the refund that belongs to the husband, that amount would go to whatever that person owes. And the portion of the refund that belongs to the wife will go to the wife.
Okay.
So it wouldn't be so much that, oh, they're going to take it all anyway. I have no control. It doesn't matter. You can claim injured spouse and show that, back loan payments or back child custody or whatever belongs to this individual and it has nothing to do with the other.
Okay.
So, injured spouse is really important. And
Okay.
then one credit that's going to go away at the end of the month, the energy efficient home improvement credits, is huge. Over the past couple of years, I've had a lot of clients that have actually done that, implemented energy efficient appliances or new insulation or things of that nature. And they qualify for these home improvement credits. So it's up to $500 if you have more energy efficient windows. It's up to $750 if you have new external door or exterior doors.
Okay.
So it's like 8, 9 different um, home improvements in which you can get credits. And what I found also is that if you pay condo fees, some folks say, well, I don't really deal with that directly. That's involved in my condo fee. My condo, association does all the improvements. Well, you pay a fee to the condo association, right? So
Mhm.
that credit can still apply to your tax return.
Wow. Okay. Very
Yeah.
good. I realize there are a few I missed over the years,
Yeah.
like that
and that
education
and that's
credit.
only yeah,
Right.
right. And that's only for federal, right? And so,
Right.
with those three hues, one for federal, and being in Massachusetts, if I can just touch on the three that I find that in
Sure.
our state,
Okay.
so renters credit,
Mhm.
if you rent here, and it doesn't matter how much you make, you get a credit up to $5,000. Now, living in Massachusetts, you're like $5,000 that you could pay that in a month. What is that going to do? But that's 1 month of rent
Okay.
that you don't
That's
have to
good.
pay.
Better than nothing.
Um,
Yeah.
it's better than nothing. And there's actually
Mhm.
24 other states that
Okay.
offer a renter's credit. Um, then the student loan interest deduction, if your income is too high, in order for you to qualify for the deduction on the federal side,
Mhm.
there are at least 10 states that will still allow you to claim the student loan interest on your state return.
Okay.
So it may get erased when you put it in for the federal, but what folks don't know is that when you do the state, you have to look for that so you can re-enter it for the state deduction. And then for the clients that have children or nieces or nephews,
Mhm.
there's the 529 savings plan deduction or credit. And this is offered in more than 30 states and
Okay.
DC. So if you contribute to this fund for, again, for any child under 18, you can get a deduction or a credit for that as well.
Okay. And I want to revisit that when we do the program on the education investments. I want to, probably bring you back on so you could talk a little more in detail about that 529, the tax implications of that. So,
Sure.
but yeah, that was an eye opener because, like I said, there are a couple of education credits that I definitely missed out on. How far back can you go to get those?
Only 3 years. Only 3 years.
Yeah, I knew that when I asked, but hey, the answer
Right, right.
no till you ask, and then sometimes the answer still no. So, but I just wanted to make sure. So then,
Fair enough.
along those same lines, what are some of the most frequently asked questions that you encounter as a tax preparer?
Oh, well, Charlene. Okay, so I had to go through this list because
Okay.
this is good. So, okay, so the first one is I get asked from people taking the education course, from clients, from coworkers, from just folks that I just stop and I'm talking to in the hair salon.
Mhm.
I don't understand why the IRS just can't take what I owe. Or why can't they just tell me what I owe?
Okay. Okay.
Why do we have to do this tax thing every
Okay.
year?
Okay.
And our system, our tax system is a very complicated one, but more on the fair side compared to other uh, tax situations in other countries.
Okay.
So, and when I say that, I mean, well, I'll go back to the tax story. When
Mhm.
I say that your life events impact your tax outcome, the
Okay.
IRS only knows what you put on your W-4 form.
Okay.
Your state Department of Revenue only knows what you put on that state withholding certificate. Anything else that happens in your life, they have no idea. So
Okay.
if you had a child, if you were taking care of a parent, if you switched jobs, if you got a bonus,
Mhm.
if you moved, three different states. They don't know any of that. And all of those things impact your tax outcome. So, sure, it would be easy to say, let's create three tax brackets, and either you fall in 10%, 20%, or 50%. But that may not be fair
Okay.
to everyone across the country, right? So they have a number of other uh, areas in which to consider to identify what your tax situation would be. What does your tax outcome look like, and how do these life events impact it? So it's not that simple to just say, tell me what I owe, right?
Okay.
One of the other things I always get too is, why do I always owe? I've never gotten a refund. I always do my taxes right. I go to H&R Block. I go to wherever I need to go. I don't lie. I give all my forms and I still owe. Something must be wrong. And it's not that the IRS or your state is not recognizing that you have already paid taxes, but it simply is that you're just not paying enough. And again, I talk about the life events, right? So when you start a job, maybe you were a family of four. You were at that job for 15, 20 years. Now your kids have graduated from college, they're out of the house. Maybe your spouse has passed away or moved on, or maybe you've gotten divorced. And so your initial tax withholding was based on a family of four. You never went back and updated it. So they reduce the amount of taxes that they take out based on your family size. So right now, then you go and you do your tax return and you just have one person on it. You didn't pay enough.
Okay.
So updating your W-4 and your state withholding forms as life events happen is crucial to controlling what your tax outcome looks like, and making sure that you pay enough, or at least close to enough, so you don't have any surprises when you do your tax return. For those folks that may get bonuses and promotions and things like that throughout the year, if your employer decides to not take an additional tax amount for that flux in income, you can pay an estimated tax payment to the IRS and your state. And it's just an online process. You go on, you create an account, and you can say, hey, I want to pay another 20% of this other bucket of money that I came into, right? If you don't do it that way or update your withholdings, then you can expect to probably pay something at tax time. So it's not, why do I always owe? They're always taking taxes out, but they're not taking enough. And these are two ways in which you can try to manage that. And then lastly, the third question, I have a lot of clients that have elderly parents. And so they're always asking, like, can I claim a parent? They don't live with me, but I support them. How would I do that? Would the IRS come after me if I put my parent on there and we have two different addresses? No, they won't come after you. If you can guarantee that it's 4 tests, so one, the relationship test, if you can guarantee that they're your parent, right? Their income cannot be more than $5,200, not including anything they're getting from Social Security. And you have to prove that you are providing more than 50% of support. So that's food, shelter, clothing, etc. And they can't be married. So then essentially it's like, well, they may have somebody else that can help support them, right? So if you meet those 4 tests for whoever the qualifying relative or child is, then you can definitely claim them and they don't have to live with you.
Wow. Okay. Very good. Very good. Very good. Eye-opening answers. That's what we're looking for.
Great.
And then, like, my last general question is, how long should we keep tax records? What's the time limit for?
Well, as we were talking about the credits, right? If you want to go back and correct something or claim it, it's 3 years. That's the IRS standard. They say as long as you keep it for 3 years, you'll be fine. The problem with that is that the IRS has a longer audit window of 7 years.
Wow.
So let's say you had an error on your 2023 return. They say, okay, that didn't look right. Please fix that. And then they say, wait, I want to go back and look at your 2022 return. And you're thinking like, okay, that's fine. They can only go back to 2022. No,
Yeah.
They can go back 4 more years, right?
Wow.
So
Okay.
only you can go back 3 years. They can go back 7. So I tell my clients to keep them for 7 years,
Okay.
just in case. So then, if they have any questions, you're not caught right in the middle of like, oh my goodness, I don't know. Where's that return? I don't only have for the past
Right.
3 years. Keep it for 7. So if they
Okay.
have any questions, it's easy for you to go right back to it.
Okay. Well, I will keep it for 7 moving forward. The ones back are in the shredder
Yeah,
already.
just yeah, shred
So,
those
so
away.
I'm in trouble if they come back beyond 3 years.
Yeah,
But thank you for that guidance. So moving forward, I'll keep them long.
7. Yes,
Yeah.
7 is safe. Let's say.
Okay. So as we fast forward to 2025, and of course filing in 2026, what are first, what are some things we could do to prepare for filing our 2025 taxes in 2026?
Mhm.
And when answering that, just if you could elaborate on what are some things we have to do by the 31st of December
Mhm.
versus some things that we can do up until we file our taxes. For
Okay.
example, I did a Roth conversion and I was thinking I had till April 15th to do that or until I filed my taxes. I found out I needed to do that by December 31st.
Mhm.
However, I can do a Roth contribution up until April 15th. So those kind of idiosyncratic, details, if you
Yeah.
will. Yeah.
Okay.
Mhm.
So I go back to taking your time. That's like, again, first and foremost. And then what I even ask my clients to do in preparation for the upcoming year is to compare last year to this year.
Okay.
So, and that's pretty easy, right? You have the returns, you may or may not have the documentation, but at least looking at the return to see what credits and deductions and the forms that are there to kind of drive what forms you're going to be expected to have for the next year. And
Okay.
that's important because companies do make errors and they think that they sent you all the forms that they were supposed to. But now you have a little bit more insight and you can say, hey, I was supposed to get X, Y, and Z. And then also just looking at the year overall and what life events that impacted your tax story occurred in that year because those will have great tax implications as well. So take your time, compare last year to this year, and really sit down and think about what life events impacted you this year. Now, for the deadlines, um, the recharacterization is key. That is end of December. But the contributions to an IRA and to your health savings account or HSA can all be up to April 15th or when you file your taxes. Other things to keep in mind for December is a required minimum distribution. And this is really for those folks who are 73 years old or older by the end of the year. This is in a year. So by the end of this year, you're 73 or older, you have to take the required minimum distribution from your retirement account. If you don't, you will face a 25% penalty for the amount that you did not take out. So I know folks have a problem with this too. Like, it's my money. I didn't want
Yeah.
to take it out, or I didn't have to take it out, or whatever the case may be.
Yeah.
Well, take it out and put it into your checking account.
Yeah.
But don't face a 25%
Yeah.
penalty just
Oh,
because you didn't take the money that you've been putting aside to save
sure.
anyway. So that has to be done by December 31st.
Okay.
Maxing out 401k contributions has to be done by the end of December. But like I said, traditional IRA contributions can be up to April. Any charitable donations that you're looking to donate, any furniture or household things, that has to be done by the end of December. There's also something called tax loss harvesting. So let's say you had a really good year in regards to in your investment strategy, and then there was some that you could essentially sell at a loss to ensure that you don't have to pay a ton on capital gains. you can consider selling some of the investments at a loss to offset the capital gains. So you can do that up to $3,000. And so that's another $3,000 that you don't have to pay taxes
Sure.
on, right?
Right.
So that's also really good. If you want to adjust the W-4 withholdings, like we talked about in regards to managing your tax outcome and the tax withholding that your employer um, does on your behalf, then you can do that at any point in the year. But the end of the year is a good time to kind of look at this as like a cleanup item.
Okay.
And then use any flexible spending account funds by the end of the year. So we talked about the health savings account. Those funds roll over. The FSA one does not. So those you need to use by the end of the year, or you essentially will lose them.
Okay. Wow.
So
Well,
that's
hopefully people will look at this again and again till they get all of the items that they need to do before and all the items they could possibly do in 2026, because that was a lot of information, but good
yes.
information that we all need. So
Mhm.
as we conclude, I'm going to ask you with regard to 2026 tax laws, what are some of the changes that we need to be aware of as when we get ready to file?
Well, I'm not sure if you're aware, back in July, we had this one big, beautiful bill passed. And it's about 475 pages, but the IRS did a really good job on summarizing the most impactful changes. And so, one of the biggest ones that I see that will impact a lot of the seniors, if you're 65 and older and your income does not exceed $75,000 for the year, then you get to claim an additional $6,000 as part of your standard deduction. And what this means is it really just reduces your income by 6 grand. So again, something else that you don't have to pay taxes on in that age group, which is nice.
Yeah,
Not there yet, but
yeah.
that's really nice. Um, no, there's something else that's really new is no tax on tips up to
Okay.
$25,000. So most times it's included in the income on the W-2 forms. But we're saying tips are something that's not a requirement. It's because you did such a great job and it's kind of like a gift. So why should
Okay.
you be taxed on it?
Right.
So no tax on tips up to 25,000. No tax on overtime. So that'll also be separated out on the W-2 forms. And no tax on car loan interest, which is another brand new one.
Hmm.
Lease payments do not qualify.
Okay.
Um, then there's also the adoption credit that has another $5,000, to take care of any adoption lawyer fees or placement fees or things like that. Um, and then the clean vehicle credit. So if you were out here buying a Tesla or being more energy efficient with, your cars, that credit was available until 2032. But the bill cut that short to September 30th of this year. So if you purchased a clean vehicle before September 30th, you can
Okay.
still claim the credit on your return for next year.
Okay.
And then when we were talking about home energy and energy efficient credits, those are also set to expire at the end of the month. So if you wanted to get new home energy efficient appliances or replace exterior doors, windows, insulation, all those kinds of things, you have 12 days to do that in order to qualify for the credit.
Wow. Okay. Well, good, good. This has been such a great and informative interview. We thank you for taking your time, Joy, to enlighten us with regard to taxes in general, and particularly as we file our taxes in the new year. Before we end, though, I would like for you to share your information just in case others are interested in getting in contact with you, be it for a review or to become a client, whatever the case may be.
Okay, sure. So I'm reachable by email. That's the best way to contact me. So it's Joy, Joy, at pembertontax.com. You can also schedule a free consultation by going to the website at pembertontax.com. And if you have any questions, just let me know.
All right. Well, again, thank you so much. And I just want to say happy holidays to everyone. Thank you for tuning in. And we look forward to seeing you again next year. And I am intending to have Joy come on from time to time to just talk about the tax implications of some of the financial information that's shared. So thanks, everyone. And we're going to sign off for today. Have a great day.
Have a great day. Thank you.
Don't miss out on valuable insights. Subscribe to our channel, hit the notification bell, and become part of our community dedicated to financial success. Let's embark on this financial journey together. See you in the next episode.